Every 4 years, Bitcoin decides to get a haircut, going on a diet and cutting its rewards in half, reducing the Bitcoin supply. In this video, I'm going to be talking about how the Bitcoin halving event will affect the price, if it will affect the price, what has changed since the last halving event, comparing the halving event, and just what my general thoughts are going to be for the upcoming halving event in April. And if you want Bitcoin price to keep going up, like and subscribe, and I guarantee you it will. Not financial advice. Let's get into the video. Back in 2016, when everyone was trying to catch Pikachu in Pokemon Go, yes, I know it feels like forever ago, and that game was freaking amazing. I would love to play it again. But Bitcoin was on its own journey, a halving event, a diet to cut the rewards of Bitcoin in half. And if we look at the history of the Bitcoin halvings, we had one in 2012, one in 2016, and one in 2020. And the block rewards have been reduced quite a lot from then. So yes, they're reduced by half, but you can see that the Bitcoin rewards were reduced from 50 to 25, 25 to 12. So we only had a 12 drop there, and then 12 to 6.5. And then we're going to see it go down to 3.125, which is only a free drop, so it's quite a lot less. And that next date is April the 19th of this year, which is coming pretty fast. You will blink and it will be there. And this time you won't be trying to catch Pikachu or whatever, that you'll have enough time to watch this event unfold and you'll be able to get in and make some money depending on what the price does. So let's take a look at the price over time for Bitcoin during these halving events. So before 2012, we had a price of 2.54, and before the halving event, 365 days, we had a 385% increase. And then 365 days after the halving event, we went up 8,000%. And almost always we see a drop after the halving event at some peak. So that's just something to keep in mind. This one happened straight after, and we went right back down to 269 from 1,000. And obviously that's a huge increase. And then the second halving event, which happened in 2016, we had a starting price of $269, which went up 142% for the 365 days preceding the halving event. And then for the after period, we went up 284, so double essentially. So we can see this one's dropped quite a lot, and then this one's dropped significantly. And then if we look at the next event, we can see that we started at 7,325, but we only went up 17%. And then we came down a bit, and then the halving event happened. So then, I mean, coming down, a lot of this is COVID starting here, and then obviously the rise back to it. So there was a bit more uncertainty here. So it's not just the halving event, it's obviously a lot of things that happen around it. At this time as well, in 2017, 2018, there was a lot of liquidity in the system. And around 2018, even the stock market dropped, but I believe the stock market to be delayed. The stock market dropped around August. So, I mean, it wasn't directly related to the liquidity or the bad economy, but we definitely did see a rally in lieu of that. I mean, obviously the halving event did have that kind of impact, but there is definitely a lot more happening around this. And then we see a massive increase in the 360 days after the halving event. And now, so we can see that actually this has gone up quite a lot compared to here. But as we know, this was because of COVID and there was a lot of stimulus in the system. So it's not really a good indication to say, okay, this was because of the halving event. Actually, a lot of this was the fact that there was so much liquidity in the system. So where are we now? Well, Bitcoin has matured a lot from a young teenager that it was in 2016 to 2012, where it just had wild emotional swings all the time. Now we've got institutional investors swiping right on Bitcoin. They're liking it, they're coming in, and we're at a much higher price point. So to go from somewhere of 7,000 to 56,000, it takes a lot more investment than to go from 2.54 to 1,000 when the market cap's much lower. And what I mean is, if you had a market cap of 100,000 to go to 1 million, it only takes one semi-sizable investor to invest 900k. When you're at close to $1 trillion, if you invest that 900k, you're not going to see a lot of difference. You're going to need some big whales to get those movements. And I don't think we're going to see that kind of huge percentage. However, there are definitely a lot of factors at play. In this part of the year, we're expected to see some rate cuts, and that's going to introduce some liquidity into the system for starters, because there'll be cheaper money on the interest rates, and also people will start to unlock their capital from their holdings as cash and start to throw it back into the system, where it can either win or lose their money, and they're going to put it to work. They're going to put it into investments, they're going to put it into crypto. Now we've seen the ETF approved, we'll probably see a bit more institutional money feel comfortable investing in crypto. So perhaps the halving event, coupled with the fact of increased liquidity, we're going to start to see a good rise. But where is it going to be? I would probably say somewhere in the region of this, perhaps. I would say maybe we go to around 100k in the year after the halving event. That would be pretty expected. 200%, 250% from now. That's fair enough. I mean, if you actually look at where we are now, I mean, it's not the best. If you look at this year previous to this halving event, I mean, it's not a good sign because we actually saw a massive tank after, but we were at around 40k the year prior to this halving event. I mean, if you take it a month or two later, it's actually down 19k. So, but I mean, relative to this graph, you kind of got to take it, right? So it's only around 8% up. But if you actually look at this, I mean, that kind of fits with that, right? So maybe we see 140% or something around that. I don't know. It really depends on how much liquidity gets put into the system in that time. So it kind of goes hand in hand, though. We would expect interest rates to go down to 1 or 2% perhaps in the next year and a half. So we could see quite a lot of growth from that. So I would expect around the 200% anyway. But what are the downsides of this halving event? It's going to make mining less profitable. Obviously, for people who are mining, it's going to make the margins in mining so small that it's going to concentrate it in the hands of a few. Essentially, peoples of economies of scale who have enough space, etc., who have enough space, enough money to buy enough to mine to make it worthwhile over time, who can make those longer term investments, or just essentially get energy cheaper, because obviously that's the most expensive thing in mining is the energy. Obviously that's essentially in a way your operating costs. So if they can get cheaper electricity, they're going to be able to make mining more profitable. And that actually will end up centralizing Bitcoin, because you're going to have all the miners in the hands of a few, as opposed to the current setup where anyone can mine Bitcoin, right? So Bitcoin actually would become less decentralized as profitability from mining decreased. We also need to look at the other issues. Bitcoin cannot actually handle that many transactions. So if more and more people pile into Bitcoin and they're trying to sell, obviously mining costs could also go up. Also relating to the other one, if mining cost goes super high, then it becomes really difficult to sell your Bitcoin. So either people just won't sell it, or people will be less inclined to buy it, and they'll start to look into other cryptos, which are actually developing really well. We're actually seeing a lot more utility in crypto now, other than the scammy previous hype, where if you look at Solana, so much has been built on chain. There's so much use cases and technological advancements in this, whereas Bitcoin is just digital gold, essentially. If it becomes super difficult to sell your Bitcoin because so many people are trying to do it and mining costs go sky high, or transactions are just not processed, then there's going to be either less people buying into Bitcoin, or people are just going to keep holding and things will just kind of happen a bit more slowly, but the price would just absolutely skyrocket because nobody's selling and people would just essentially hold it and the price would just keep going up, but they'd be very illiquid. So there's a lot that could change, but I definitely think we're going to see a rally in Bitcoin after the halving event. Don't necessarily think it's just down to the halving event, but I do just think we're going to see a rise just because global liquidity is going to come up and there is going to be some impact to the halving event. It's going to be much more minimal than before, but that's essentially my opinion on the Bitcoin halving event. I don't expect any less from the drama that Bitcoin loves. It loves being in the press and just causing all sorts of mishaps. So I look forward to seeing what happens in the next year for Bitcoin. What do you think about the halving event? Drop your thoughts below in the comments. I'd love to hear them. And if you like my channel, please like and subscribe. It really helps me. Thanks.